Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, and we are now on the 28th of January, 2019 at 3:40 p.m. Central Standard Time. Well, as you can see, all the stock indices are lower. I don't expect a big change by the close. Got to tell you, though, something that away from the markets for a moment. On Wednesday and Thursday of this week, Chicago's going to be hit by a polar vortex. Now, we haven't seen anything like this since the 80s in Chicago. What I mean by that is we may not be here. You may not get these videos either Wednesday or Thursday. There's a good possibility of that. We're talking wind chills of 50 to 60 below zero in the city, not in outlying suburbs. We're talking temperatures anywhere, they're saying now, from 24 to 30 below zero, which could set new records for us. And you imagine living in the windy city, which I know it's politics, that's what gets named. But you get these winds, you can't be out there even 5 or 10 minutes. I mean, it is brutal. So if you don't see me, we'll do our best to put up something temporary just so you know that we haven't gone anywhere. But I had to say that to you because I'm going to lose staff coming to work starting on Wednesday and Thursday. I know that. All right. So in looking at the market today, we had Sarah Saunders on with her first White House conference. Larry Kudlow was there. John Bolton was there. Steve Mnuchin. We were listening to the president put out, with Mr. Mnuchin actually put out sanctions on PDVSA, the large Venezuelan oil company. They're going to still be able to do business, but anything that's paid goes into a blocked account in the U.S. It'll obviously be for the new president-elect, but we'll see what happens. Gold was blocked from moving out of the UK back to Venezuela. It's their gold. Won't do it, the Bank of England. You're seeing country after country tell Mr. Maduro he's got to leave. And of course, we have China in town. We begin the trade talks. The FOMC meeting begins tomorrow. On Friday, we're supposed to get employment data. It's going to be a full week, and then you get the earnings, which today drove the stock markets down in Caterpillar, NVIDIA. When you take a look at the market, we've had a nice rally, and we've been in something of a small correction. If we go back, you were down last week. The week before, you were up. So we were down 1 week, 8 points, not much, and we're extending that a little today, another 23 points down. You can see the distribution going on here. Now, as I've pointed out on the weekly chart, we're in an area of a 62% correction. Daily chart's one thing, weekly chart's another, I realize that, but you're at a stall area. That's all that I can say about it. The market has got a pattern that is still bullish of higher lows and higher highs. If you heard Mr. Kudlow today, he was saying that the way that he and the White House figures growth, it's 3% GDP, whereas the CBO thinks it's 2%. There's a big difference between those two and how you end up paying for the deficits that are created. When you come to moving averages, we are over the 18-day moving average, and that number is getting very close to this 26,1250. As you can see, it's jumping about 8 points a day. So tomorrow it shouldn't be there. It should be just over the 2600 level, I'm thinking. But if it gets down there, it breaks the pattern, and that's why I say it's important. When I look at resistance, you have layers. You've got the upper Bollinger Band, the 100-day average, and the 200-day average of closes. So you've got a lot of resistance. You've had a heck of a nice comeback off the break into Christmas, and now the stall right here. And think of the week. You've got all these earnings coming out. I think Amazon's this week, Apple's this week. You're seeing Caterpillar just came out, NVIDIA's come out. There's a whole slew of them. It's going to be a week that you get moved around like this in the financial markets. Then, of course, add this cold that we get in Chicago. When we take a look at the momentum of the market, you have lost, from the looks of it on the close today, the embedded reading. Now, I don't have the close right in front of me, but you're just shy of it. You're good enough that if you had an update tonight and tomorrow, you could get it back. But when you lose it, if it stays lost the second day, the odds are strong that price and the 18-day average are going to come together. When we come to the NASDAQ, this is much clearer. That is a lost embedded reading. It's not by a half a point, it's by 4 points. That doesn't mean, again, it can't get it back, but you'd have to get a big pop right away. Otherwise, the odds favor price in the 18-day average coming together. This market hasn't been trending anyways. As we come to the Dow with today's break in the market at 24,284, we got through this break low. So now I'm actually going to end up with a higher high and a lower low. And here, if we take a look, if the market finishes like this, it keeps its embedded reading. So it hasn't quite lost it. We're at that dangerous time in the market where you can go either which way. And you've kept the embedded reading, and that's all I care about in the Russell. And the reason that's all I care about, it rules as far as I'm concerned that you're keeping a bullish bias in the market. In the VIX, you got up again to the 18 and the 100-day averages, and you sank back down right after the press conference. Interesting day today. In T-bonds, all the sideways action, but I don't know the traders are going to do much, waiting for Wednesday's Fed announcement, but it's more than the announcement. It's what is asked of and how Mr. Powell answers the questions of the press about the roll-off of the balance sheet, what do they see with the economic data, is the Fed going to raise interest rates? There'll be talk like that. I doubt the Fed will let loose of their hand, but the market is not pricing in an interest rate hike between now and March, and it's doubtful between March and June at this point. When you take a look at the 10-year notes, you've got momentum oversold. You've got a market that's got higher lows, higher highs, but staying under the 18-day average of closes. Everything's fighting each other. It's a lot of sideways action. The same is true in TLT, the popular ETF. Higher lows right into that, what I call the line in the sand, that 18-day average of closes sort of stuck right there. In the dollar index, you slipped down today, challenged the 100-day average in green. Resistance is back at the 18. The market is waiting for more economic data. I mean, you can see the nice rally we had, but you've gone into a complete pause in the market. Whereas on the eurocurrency, the low was made when we saw the European Central Bank make its monetary policy and Mr. Draghi talk. That was it, and the market's come back 150 points again to that line in the sand as the market's trying to figure out the next move. There's a key vote tomorrow in the House of Commons in the UK, but every vote's a key vote because there's no game plan on this Brexit. They're trying to figure out what to do, and the European Union keeps telling them, don't come back to negotiate. We're through negotiating. This is our deal if you want to take it. If you don't, go ahead with your Brexit. Do whatever you've got to do. And that's weighing on this market to a degree. The Japanese yen has got a pattern now of higher lows, higher highs. We doubt that the Bank of Japan's going to do anything, but the market's nervous right here. With the earnings we have, with the FOMC, the Chinese trade deal, certain amount of people not wanting to be in the dollar, they sometimes move back into the yen. In Bitcoin, we're keeping the pattern of lower highs and now lower lows again in place. The market is diving down. It is oversold. The first objective, 33.05, would be a new break low for this contract, and it is the lower Bollinger Band. In crude versus WTI, I'm talking Brent versus WTI, the spread has come in about $1 between the two. I was watching the Saudis today as they were making out a point on, I think it was Bloomberg that I was watching as they were talking about it, that the oil that they had produced in November is just getting to the American shores. They will have cut back their production. They're talking, I think it was a mixture of OPEC, over 1 million barrels a day, but the Saudis are prepared to do more. Even with that, what's going on in world economies and seeing Europe slow down and China slowing down keeps putting pressure on the market. So you're going to have to get to the point where the supply meets the demand. Market acts like it wants to hang in here. It's back to the 18-day average of closes, which I call the battleground. Same in the WTI. Right to that number. Gasoline prices dropped again. The market's seeing too large of a build in gasoline stocks and distillates, and that's weighing on these markets. And in nat gas, the market today down again. Now, you would say down when I just started off telling you this terrible weather we're going to get into the Midwest. The reason down is the first weeks in February are milder. So we're getting this vortex, but once it's gone, bye-bye, then the weather lightens up. Interesting how the market digested all that. You know, one of the things we try to do is give you our handheld device. Think of it as a business card that I put in your hands. And the reason I do that is I want you to be able to see the quotes, my videos, they all play through here. You'll get a notice, and we use now push technology rather than a text. So it comes up on your phone, you just click it, it all automatically happens. It'll open up the app, play the video if you want it. Let's assume you're trying to get a price alert. It'll send you a message that your price alert has been done. You can even listen to quotes as you play in this. So if you're driving your car, you can hit this, and at any point it's going to start playing your quotes, and yes, you can say play quotes. It will work with voice activation. Again, we're making this available to you free at this point in time. It's going to have everything that we want you to have, including news, quote symbols, different ways to view them, by the way, bids, offers, big symbols, little ones, all the news stories you want, different energy market stories. I can go on and on. How do you get it? Simply call my staff, go to our website to sign up for it. We have to send you your own unique user ID and password. We'll get that to you, and away you go. Then with that, you go either to the Google Play Store, or you're going to go to the Apple Store, you download, put in your user ID and password, away you go. If you're a client of ours, we also have a way that you can place orders with us. I'm Ira Epstein. You have a good day. I'll talk to you tomorrow.